Hi there, welcome to Kneppyinvests. One of my investing strategies is to search for newly listed companies on the ASX that are small, unloved by the investing community, profitable, and potentially cheap. And there is a possibility I might have found one that I'm featuring in this video, and that company is FOS Capital. The way I found this company is I just looked at their full-year results, and I did see they have been growing compared to last year. They are profitable, slightly operating cash flow negative. So I thought I'll delve deeper into what this company does, because when I saw the name FOS Capital, I instantly thought maybe they were a small fund manager. It's just that word capital that had me not confused, but more leaning towards that side of the business. Now, as I did delve deeper into what this company does, I was completely wrong in what they do. In fact, FOS Capital is all about lighting and lighting solutions, which does make a little bit of sense because it does look like the CEO and founder of this company does have some Greek origins, and the Greek word for light is FOS. I'm not sure if it's spelled P-H-O-S or just F-O-S, but definitely there is some Greek associations with this company based off the CEO, and I think that's the reason they called this company FOS Capital, because it has an association with light. But what exactly does FOS Capital do in regards to light and lighting solutions? So let's touch upon that right now by looking at some facts in regards to this company. FOS Capital is into LED lighting solutions. They have two divisions. The first division is probably the one that excites me a little bit more than the second division. And that first division is lighting, design, and engineering, which is just bespoke lighting solutions. So they manufacture products to client specifications. So that does interest me because that gives this company a bit of a moat, a bit of advantage potentially over the competitors, particularly if they're really good at what they do. Their second division is manufacturing. So this company is not really into the retail space, and I do prefer companies not in the retail space when it comes to these sort of companies, because the question becomes for me is what competitive advantage will they have over their competitors? So I can see a possibility where FOS Capital does have a competitive advantage, and I am looking for companies with a competitive advantage. FOS Capital was founded in April 2019, so this company, it hasn't been long in existence, and they listed on the ASX on the 7th of June 2021. So about 5 months and a bit being on the ASX, so haven't been around long. There's not a lot of interest in this company, and you can tell that just by the market cap, only $11 million at a share price of 24 cents. Now, I've just mentioned that the CEO founder of this company is potentially Greek just by his name, Konskrinis. That does seem like a Greek name. Now, he has a 37.5% equity interest in SKM, and SKM investments have a 65% interest in FOS Capital. So there is a fair bit of skin in the game among the executive directors, maybe even the non-executive directors. And HGL, which is an ASX-listed company, also has a 9% stake in FOS Capital. So there is potentially a lot of skin in the game with this company, maybe too much skin in the game, because apparently there is a sweet spot in regards to skin in the game, and I think that sweet spot might be between about 10 and 30%, something like that. Don't quote me on that, but I have heard that recently, and in fact I've heard that quite often in the past 5 years. And the ticker code for this company, could it be anything else but FOS? According to the website, the FOS Group is one of the few wholly owned Australian lighting suppliers which has maintained full manufacturing capabilities in Australia. I'm not sure if that is an advantage or not. Potentially it is. They have quite a few, I'm not sure if you can call them subsidiaries, but definitely businesses that manufacture a full range of commercial luminaires, outdoor fittings, and linear extruded lighting, and is the exclusive distributor of Forma Lighting in Australia. So they have Mega Bay, Friend Lighting, JSP Lighting, Forma Lighting, Vector Profile. So they have a lot going on. They have made a few acquisitions in the past few years. So it does seem like one of their strategies to grow in the future is through the acquisition route. And also they are hoping for a bit of organic growth as well. So that's going down the acquisition route in itself is not a bad thing. But at some point in time, you do have to rely on organic growth to grow their business. I think if they can grow through acquisitions, that can be good in the short to medium term, but they will have to focus on that organic growth. And the thing I am looking for with investable companies in this sort of area, like $10 million market cap, is the potential for these companies to 10 bag over the next 5 years. And I do think the best way FOS Capital can 10 bag is through the acquisition route, particularly because I'd say this area, this sector is quite fragmented. There's a lot of players within this field, and if they can start to bring some of these companies together, that's probably the best way FOS Capital would be able to grow. One of the negatives about growing through acquisition route is they will have to do a lot of capital raisings, increase the shares on issue, dilute the current shareholders. So you might see the valuation of the company increase by tenfold, while the share price might only increase by 3 or 4-fold just because of that dilutory effect. So I have started my research on this company. I do like that they're not just simply a retail company. They're into manufacturing, designing and engineering, that sort of area. I do think there would be much higher margins in those areas than just simple retail. So I do have a little bit of interest based off my initial research in this company. Now let's look at some of the financials. They have released their first financial report as an ASX listed company, and they do provide financial year 20 numbers as well. And we can see this company starting to show signs of growth, simply because they have made acquisitions. Revenue has grown from 2.8 million to 8.2 million. A lot of that is through acquisitions. Gross margin is quite good, and I think the reason that's good at 40% or just over 40% is simply because they're not just a simple retailer. They are in manufacturing and design and engineering. They are not yet operational cash flow positive, slightly negative, $100,000 in financial year 20 and $900,000 in this year, but they are profitable by $740,000 this year. So at this point in time, you can't take a lot away from operating cash flow and profit, fairly small, but the very fact that revenue has or is growing is one of the attractive things about this company. Cash on hand, $3 million, P/E ratio 14.9, price to sales ratio 1.3. A little bit too early to take any sort of opinions in regards to those valuation metrics. So I can't really say that FOS Capital is attractive based on valuation right now. Probably have to wait maybe 1 or 2 years to see how this company continues to grow. But first signs are looking quite good, particularly if they continue down the acquisition route and make some astute acquisitions. I think that's very important too. How much do they pay for any acquisitions? But I think this is part of their growth profile, growth strategy, is to make acquisitions. So it's very important to see how management do handle those acquisitions. If they pay too much, that would be a bad sign. If they pay not too little, but if they pay good prices for any acquisitions, that would be a good sign that management are doing a good job. One thing I really like to look at is the cash flow statements for all companies to get a good idea of how a company is traveling and progressing. And for FOS Capital, receipts of customers, just like the revenue, have exploded over the past year, increasing from 2.4 million to 8.9 million. Now, they have also increased some of their costs, including payments to suppliers and employees. That's increased from 2.8 to 10.3. And that's the reason why they're not operational cash flow positive yet. They also paid an acquisition, $1.2 million in acquisition. Got some money from the IPO process, $2.7 million. So they do have $3 million of cash right now that they are sitting on. I do like companies to be cash positive, or net cash, if you will, simply because it does give management a little bit more flexibility in regards to what they do with their cash. For FOS Capital, more than likely that's going to be acquisitions. because they could do share buybacks, dividends. It definitely won't be going down that route. So I think they want cash on hand for acquisitions. So don't be surprised if you are a shareholder of this company that they might make more capital raisings for acquisitions in the future. That's not necessarily a bad thing. It can be a good thing depending on how much they do pay for those acquisitions. Since FOS Capital only listed on the ASX at the start of June, we only have about 5 months of history when it comes to the share price. Things are looking quite good for this company. Typically, when a company does list, there is a little bit of initial hype, and that leads to share price increasing in the first week, maybe 2 weeks, and then that hype wanes away, and then the share price pulls back towards the IPO price. But the exact opposite thing happened with FOS Capital. Share price opened down on the first day of trading and then fell over the next 2 weeks. It was traded on the ASX. In fact, it fell all the way down to 18.5 cents, but we have seen the share price recover, get to a high of 27.5 cents. So share price has been moving up, and right now share price is around 23 to 25 cents. One of the things you do have to be wary about with these sort of companies is the liquidity. There might not be a lot of shares traded on a daily basis, simply because management and that SKM investment company have a lot of shares themselves. So not a lot of shares are traded on a day-to-day basis. If you do see the share price coming under pressure, maybe heading towards 15 cents, that's when I would become interested, because I do think if we do see the market getting really low, there's going to be way more significant upside than downside if we do see that. So if there is a little bit of negative sentiment that does drive the share price down in the short term, that's when you could take a position in this company. I would be looking at 18.5 cents because that's the previous low as a good potential buying price, a very safe, low risk buying price for this company. But things are looking good initially for this company, both financial wise and share price wise as well. That's all I have for this initial video on FOS Capital. Definitely small, markup of only $11 million. They are profitable by a small amount. Now, when it comes to whether they are cheap or not, I think it's hard to say right now, but things are looking good for this company. And I think the next few years will be very important for the future of this company. If management can continue to grow, make some astute acquisitions, maintain the margins at around gross margins above 40%, a markup of $11 million for this company would look very cheap. So there's a lot of ifs in there, but I think the potential upside is there, and the downside risk at a markup of $11 million is fairly small. So I think this is a potential buy right at these prices. I'm going to put this onto my watch list. Keep watching how they perform over the next 6 months, and maybe even think about taking a small initial position if the share price falls towards 20 cents, particularly if it falls to 18.5 cents. It may not fall to that region, but if it does, I'll take my opportunity and buy some shares in this company. Now, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.